There have been some more numbers coming through today indicating that there could well be a little bit of a problem for the construction sector, the residential building sector, in the months and quarters to come. As we all know, the government of the day is pushing house builders to build homes. The problem is that they're having to pay more for the construction materials. And this has been brought into sharp focus today because of a company that came out and reported earnings that were pretty good on the whole. But what it was an underlying volume decrease. In other words, less people are buying. But what's happening is that the increase in overall inflation on those raw materials is going up to a point where we're seeing more revenue coming through. The fact that Brickability is producing some relatively good earnings out of this is good, but it may only be transitory. Let's take a look at some of the charts just to back up what I'm talking about here. Brickability Group is not a massively traded stock, but it is interesting in as much as you can see clearly the direction of travel from the highs we had back in September 2021 is on the way down. And indeed, in the last couple of days or so, we have hit levels there not seen since December 2020. And with the earnings out today, we got this stock up 1.75%. With the earnings come this information that the good figures are here. They may actually continue for a next quarter or two, but I think in the long term, it does have problems for these construction companies. This is the FTSE 350 Household Goods and Home Construction Index, which is where some of the big house builders are, the Persimmons, the Taylor Wimpey's, the Barratt Developments and so forth. But we've got a little bit of an uptick on the right-hand side here, but you can see the overall direction of travel from the highs we had back in September 2021. All the way up at 18,691. Here we are now at the 10,000 level. So considerably off the highs. And it's these large house builders that have really been causing the pain. This is Persimmon, for example. That stock was at a high back in June 2021 of £32.79. And before that, £33 back in February 2020. Here we are now at 1052, just bumping off the lows. For Persimmon, long-term problems. The company is highlighting this issue about the fact it's going to have to deal with these rising prices. And they're selling into a market which, let's be frank with you, is a market where people just can't afford to buy. Taylor Wimpey, the same sort of problem. Barratt Development, another one where we've got these markets well off the highs that we've seen recently. Now, it's all to do with the fact that the Bank of England is raising interest rates, and you can see this here with sterling up against the US dollar. And indeed, recently we've hit levels there not seen since April 2022 for sterling rising. This on expectations the Bank of England still has more upside to go. So there will be more inflation coming through. You get more inflation coming through. This means that those raw materials are going to continue to cost more, but at the same time, people can't afford the mortgages. So where are they going to find the buyers for these new homes that come onto the market? This is a vicious circle that has yet to, I think, to fully explain itself and reveal itself to the market. But I think it's something worth looking at in the months and quarters to come.